Well, before we start, I just wanted to say this is going to be a lot more informal. I think a lot of us know what we do in this space, so I wanted to dive a little bit deeper into the challenges and the big kind of releases coming up. So towards the end, we'll just have a brief Q&A. Feel free to ask your questions then. To get started, I'd just like you all to just give your name and intro. And today's icebreaker question is, if you could implement one dream feature in an on-ramp, what would that be? Go ahead, Max.
So it looks like I'm sat first, so I'll go first. So I'm Max from Ramp. I'm a product lead focusing on growth and expansion. Dream feature, Abi. Less a feature, more an opportunity for me, which is, I've spoken about it to 3 guys out there. DIDs, decentralized identifiers, I think are going to be huge in the space. And, on-ramps are far from kind of thinking and integrating about them yet. A future where you can go on-ramp, you can authenticate and verify with 1 click through some kind of digital passport, and then pay with another click, and have a 2-click user experience for new users would be the dream situation for me.
So no KYC, or KYC is the DID.
Yeah, I mean, there's a long way to go.
Yeah. Sweet. How about you?
Magic that one up, yeah. Hi, everyone. I'm Rob from Alchemy Pay. So Alchemy Pay is a fiat crypto on and off-ramp provider. Provides Visa and MasterCard virtual and physical cards as well. I'm the ecosystem lead there. I think right now what we're really focused on, what we'd like is to be able to not just move between fiat and crypto, but actually be able to add in multi-currency exchanging as well. So at the moment, we're in the process of getting the API license in the UK, and so the idea of that is that hopefully we would be able to start off by exchanging for the user, giving them the option to exchange between Euro and USD, and I think that would bring a much more holistic kind of feel to finance through one particular platform, one particular app, and I think that would make a huge difference in terms of a user-friendly experience. I think that's major. But that's a slow process. I think a kind of more fun one that does appeal to networks and token issuers is the idea, which is not really possible except through lots of roundabout ways, but the idea that somehow we would know that, okay, this is a token holder, holds a certain amount of tokens, they get a certain amount of discounts or fees, and you can run all kinds of promos, you can run all kinds of campaigns around that. Of course, technically that's difficult to achieve. I do think also what we were saying here a moment ago, Max, what Max said a moment ago in regards to, sorry, I'm so confused by remembering your name. I forgot
You won't forget it now.
Yeah, what was it?
DIDs, I guess.
No, it was something else. But let's move on in that case. If I've forgotten my point, let's move on.
Hi everyone. So now I'm on the speaker side after being the moderator. My name is Pierre. I'm head of BD at Trustwallet, focusing on revenue and growth for Trust, which is the largest wallet on mobile for people who know it. If I had to make a wish for the payment and on-ramp, off-ramp, I would say no KYC experience for user to improve the overall user experience. But otherwise, it's more about kind of a vision. I love to have on-ramp on the seamless way possible for user, but for off-ramp, I still think at some point it would be very great if people were able to pay directly in crypto with their own wallets. Just imagine going to any shops and be able to pay just with a single transaction, instantly down directly with your wallet without using any banking services. So I would say this is my biggest wish for crypto and payment in crypto for the off-ramp mostly.
Yeah, I agree. I mean, one question for off-ramp though, it's like, as a wallet, right? You often don't want people to off-ramp because that's them maybe losing you as a wallet user. They just take their money off. So it's a tricky one there. And speaking of which, I'm curious, next question. To a lot of people here, they may be wondering, like, at the end of the day, a lot of the payment providers, you all provide a similar service, but you differentiate on many factors. What is your North Star metric? Is it, number of transactions, volume? If you could just go around and give people here some context on, what's the goal for each of your products?
Yeah, so I'd say it will evolve with your maturity. I'm sure you guys both think the same. So we're getting to a time of like rapid growth, and obviously like growth is kind of a key priority for us. And we still kind of focused on a couple of products on ramp and off ramp. So at this point in time, so, you know, a volume-driven one, something like monthly settle volumes makes a lot of sense. It's tangible, it's easy to communicate to the business, and you can really get people behind it and measure it. But I think as we are maturing and we're thinking about new products and we're getting closer connections with our customers and they are engaging on multiple products, you are more interested about understanding customer retention, customer loyalty, and trust. And something like monthly settle swaps doesn't satisfy your need anymore. So I think something like working towards customer lifetime value, so actually understanding the value, the total value that a user generates on your platform throughout the whole life cycle is like a really powerful thing, but very hard to measure and get right as a business, and actually articulate that to your business as well and your board. So we are at this transition stage, and it's like a live use case for us. So I'm glad you asked the question.
Yeah, it's very cyclical as well, from what I see. Yeah.
And I think sort of maybe to come with a slightly different angle, so you're talking about the idea of retaining users and being able to see that users are coming back again and again. Of course, ultimately that's great. At the same time, we're in the business of trying to make it really, really mainstream friendly, really user friendly for people coming from outside of the crypto world, and people who maybe don't have as much knowledge of it. So it is also the idea, we're looking at metrics, yeah, of course, transaction volume, you know, over whatever time period you want to look at, USD, value, whatever, but at the same time, you're looking at people actually being able to, you know, complete the transaction, of course, the conversion rate. You know, you want that first time the user uses your on-ramp service, your off-ramp service, you want everything to go perfectly. Because if they turn up, they're confused, if it doesn't work, if it fails, and conversion rates is, I mean, this is something that I just think this is a time. Yeah. This is an issue of time as traditional finance becomes hopefully more trusting of crypto, that there is more sort of self-regulation, that the industry proves that it can regulate itself. We will see conversion rates go up, we will see fees come down as the risk profile is reduced. So I think, yeah, of course, repeat users, but also first-time users having a good experience, I think is really key for the growth of any platform.
Yeah, I agree with Robert. It's just being very similar business, like understanding conversion, and it's broken down into so many subcomponents. So there's so many potential pitfalls for the user, from like, you know, onboarding, payments, KYC, delivery of crypto, understanding the conversion. I can entirely share your point of view. Understanding that level, but then the next level down is like huge to your success.
Yeah. From the wallet side, yeah.
Yeah, no, I agree with what have been saying just before me about the conversion and the metrics. As a wallet, we are tracking a lot of metrics coming from our user, just to try to understand how they're using the wallet to fit their needs the best way possible for us. One of the key metrics we are looking at for payments is the percentage of our user base who is using the features, basically. All the features we are launching inside the wallets, we always try to find kind of a product market fit for these features specifically. So we are trying to then look at what the percentage of our user base who is using these features. This is the first metric we are looking at, and how we can put these features or changing stuff inside the app to make it more obvious based on the need of the people who are using the wallet. The second thing is we are also looking a lot about the success rates when someone is initiating a transaction. These is both for swaps and so crypto to crypto and for fiat to crypto, because we are considering there is nothing more frustrating for someone, especially in wallets, where you are trying to do something, we are always keeping your key, your coin, but when you are trying to do a transaction and the transaction is failing for any reason, it's something we are taking a very good importance to be sure when someone is trying to do on-ramp or off-ramp, we are trying to maximize the success rate of the operation as one of the main criteria when we are choosing a partner to work with.
Agree. And since you mentioned choosing a partner, right? Like, I guess I have a question for you guys to follow up on that. As a wallet, I see this trend now. A lot of us tend to not stick with one payment provider, rather we aggregate them, just like how we aggregate DEXs, how we aggregate providers across the stack. And oftentimes the need there is, hey, we have this user maybe in Latin America who for some reason is not able to use this one payment provider but is able to use another. Like, I guess what's your take on that? Like, where do you see that going? Because at the end of the day, like, there are a lot of these aggregators now, providing aggregators as a service for reps, right? That's one approach. Another approach is obviously, making an exclusive license with teams you work with. So thoughts from, the payment provider side of things, because wallets, oftentimes we're not totally keen on sticking with one provider. That's the honest kind of like perspective, right? Just because a lot of this changes from time to time.
Yeah. Well,
Any hot takes?
I've got to find something to push back a little bit there. So you're adding in another middleman. You are adding in another middleman. You are adding in another, whatever percent. Say that again.
So it's heating up here.
So you are adding ultimately to the, well, depends on the region, depends on the payment method, could be in all kinds of scenarios, but ultimately it's never going to be the best case. The best case is to have an incredibly powerful ramp provider with huge global coverage, connections with acquirers all across the world. That's where you will actually get the ultimate sort of best value and the best situation. However, of course, while we're building, I can understand that aggregators are also being looked at and being used in certain cases. But it is somewhat of a case-by-case basis, So, and there are projects that are really focused on a specific market, let's say gaming in Korea or something like that. They're really focused on, who is the best there? What are the 3 companies maybe that are the best there? Okay, you're good with this particular payment method. You're good with this particular payment method in that region. So, could also be a combination. Some platforms are, could even combine them as well, So you could have an aggregator across a certain area of the world, and then specific ramp providers for specific coverage of certain countries as well. So, it's a bit of a mix at the moment, but it's never going to be the ultimate solution.
I agree. I mean, just taking the sample size here, I think Trustwallet as well uses a bunch of different providers. We use a bunch of different providers, and we haven't made them geographically personalized yet. But that sounds interesting. So you're saying, hey, there's one provider that's like maybe fantastic in certain region or certain
you will
type
have
of user.
payment routing, and well, you will have payment routing to try and get the best value, and that will be your providers will have that set up.
Yeah, entirely aligned really, because I think it just depends on the use case. If you look at it from industry first, gaming and social put huge emphasis on user experience, and from our experience, are largely seeking single providers to provide that fully integrated user experience. I think wallets is a lot more complex, and it really depends on the wallet, because you have single chain, few asset, few geography wallets, where it makes perfect sense to have a single provider, because you can actually come across these full service offering on-ramps that can actually service your needs. But then we have the Goliaths of the world, so the Trust Wallets, the MetaMasks, and they are multi-asset, multi-chain, global. And in a lot of emerging markets, where there's constant regulatory change, we've spoken about FinProm, we look at the US with like the challenges managing fraud rates, with card schemes. There's a lot of inherent risk that they need to mitigate, and having one provider, quite frankly, is probably too risky. But there are definitely, and it'd be good to get your guys' view from a wallet perspective, I think self-custodial wallets are more keen than ever to enhance their user experience and bring it on par with Web 2. To compete with the Revoluts, to compete with the Robinhoods who have crypto now and have a great user experience. And the best way to do that is in certain markets where you can find a full on-ramp service provider, is to definitely go like deeply integrated and provide that excellent one-click user experience.
Yeah, for sure. I mean, there's a couple things to dissect there. I guess one, you kind of hinted at this multi-chain experience. I guess you just basically, to summarize, to paraphrase, if you are a niche wallet, maybe with a single chain or a couple of chains, it's a lot more likely that you'll find a provider to cover all your bases. I'm curious for Trust, for you guys, was that the reason why you really, went through a bunch of providers? Is there anything else that motivated that? How did that play out?
First, so far we are not working with any aggregator, so we've always privileged a way to work directly with on one provider. These come from a choice mostly, and how the resources are allocated internally in the company. Aggregator can be very good because they have very fast go-to-markets. You just have to do one integration and your coverage is instantly global. But at the same time, if you think about it, you are creating kind of a single point of failure in your system, since if this aggregator is not working for a week, for a day, for any maintenance or anything, all your fiat on ramp is not working neither. So coming from that, we've always decided to work with kind of a global on-one provider. To have in mind, we don't want to work with a provider if they're not going to bring something to the end user. So it can be a better pricing, it can be a better coverage, but we always have to find why we're integrating someone in the app. In the case for the fiat on-ramp, off-ramp, but also for swap, for staking, for all the services, the thing we have in mind every time we are discussing with a partner, and the main question is how this guy is going to bring a better services, increase the product quality for the end user. So by doing that, aggregator could be a good solution for improving the coverage. But in the meantime, considering the size we have now as a company, we prefer to dig into the market and to find the right provider for the right market we need to address.
Yeah, that's fair. And I think what you said about resources is definitely a big maybe reason why people choose aggregators versus not. Because a lot of wallets maybe don't have that as a primary revenue source either, right? One thing you mentioned, this is really, I think, I'd say like a spicy take on my end maybe, but like I personally never use on-ramp or off-ramp providers. I just use a SEX, at least in the US, and I, migrated over. Honestly, just reason being loyalty or rewards or zero fees. What I see is, at the end of the day, a lot of the providers now, maybe we're just scratching the surface, but like, there is no incentive oftentimes beyond all KYC in this platform already to like be a repeat customer. So I'm curious what your thoughts are on like loyalty and like how you compete with a lot of these other sexes that have deep liquidity and maybe they have other business lines that are giving them primary source of revenue and they're able to subsidize this.
I think there's also another key difference in terms of kind of the Web3 ethos. Of course, exchanges are fantastic in many ways, but the idea that you're custodying your own funds, with a payment gateway, usually, well, it can be different, but usually the situation is they simply process the transaction, they source the liquidity, they send the token straight to your wallet. It's always in your control. There's no risk of third-party custody, failure, or anything like that. So, in terms of the idea that the crypto is about you being your own bank, having control of your own funds, then a payment gateway is much more aligned with that than an exchange. And things like FTX lets us know, okay, that's a very real risk. So I think that's one thing to say to begin in terms of the major difference, as I see it, between an exchange and a payment gateway.
Yeah, for sure. Anything on the loyalty side of things? I guess like, how would you or think of incentivizing users to come back to your specific payment provider? There have been obviously, like I'd say like Ramp, for example, they ran this campaign where you have like zero commission on ramps or off ramps for a certain period as an incentive or a perk. Maybe it's VC subsidized, I don't know. But like, what's the like? I guess like, are there any other maybe crypto native or Web3 ethos aligned ways that we could do that? Just being wallets and ramp providers working together.
Yes, I think it's fundamentally one of the biggest challenges, but it's also the challenge that we are ultimately trying to overcome as a business, right? We want to bring that Web2 SEX experience onto self-custodial wallets, onto those platforms, and ultimately elevate wallets to that level. That is our goal. Now, one of the big hurdles is KYC, but you also have to KYC on a centralized exchange. So one of the things as we integrate with more and more wallets, you look at innovative ways to problem solve for that. So one is, can you do shared KYC? Can you enhance the KYC experience on par with what centralized exchanges are doing? Shimon touched on the doc-free experience where you actually don't need to upload identity anymore. So starting to on that mission to continuously remove these friction points and enhance that experience. And I think the nuanced challenge that centralized exchanges don't have is we are a partnership ultimately. So we are working with wallets, and it's about that collaborative effort to make the experience better, and it's got to happen on both fronts. And we have some great examples of where we are doing that, but it's an uphill battle. But we are making good progress, I'd say.
Yeah, I agree. I think that's one part where we're scratching the surface, but also as a lot of categories of users, there's 80 million KYC users in Coinbase, right?
Yeah.
Who might barely use a payment provider. I'd say that would probably onboard a lot of the next set of users who are trying to venture more into the degen side of things. Yeah.
So there's also another thing is, let's say you've got, let's say it's a GameFi platform, gaming platform. Someone's been recommended, or their friends recommended for them to play this game. They come into it. They want to have the ability to purchase the relevant token there on that platform. They don't want to have to say, okay, now I've got to go figure out. I came into crypto because I want to play this game, but now I have to go and leave this game and go and figure out which exchange I want to use. And there's so many exchanges. What am I going to do when all I want to do is play the game? You have the checkout experience right there on the platform. So that's a major difference.
Yeah, for sure. So even for account abstraction and a lot of the other like wallets and use cases you see, I'd say this would make a lot more sense and probably gamify some incentives as well. Cool. Well, we have a rapid fire section now coming up, and that would move on to a Q&A. But feel free to just say yes or no, or you could elaborate. First question: P2P payments, peer-to-peer payments, yay or nay?
I would say yeah. It's something who can increase the coverage for some very specific countries where even for the best on-one provider, it can be complicated to handle the currency. So from our perspective, considering we have a lot of users on some more complicated jurisdictions like Nigeria, India, all these countries where it might be more complicated for on-one provider to get the license and to be able to handle that. P2P is a good alternative for us to bring a solution for the user on that area.
Yeah, definitely yay. But at the same time, it's a more complex experience, and that really is crypto natives are going to be doing that. So, yeah, fantastic, but it's maybe not our focus. Well, it isn't our focus always.
Yeah.
Yay also, but likewise, it's just nice to have alternative payment methods for other users. So
Yeah, for sure. I mean, it's really just P2P, sexes, and payment providers, right? So three of them vying for the same same volume. All right, next one. This is Forecaster or Twitter. I don't know who's been active on that.
So world without Twitter. What? How could you say that? That's blasphemy.
Oh dear. I've only just been using Forecaster recently, hands up, but I'm enjoying it. It hasn't got the user experience of Twitter yet, but yeah, I'll say Forecaster.
Love it, yeah.
Didn't get the time yet to test Forecaster, so I'm going to say Twitter for that one.
All right, sweet. Last question here, open-ended. Which emerging market do you really see as having maybe the most scope to grow? Doesn't need to be quantitatively, just more, what you've been noticing lately in payment systems.
So I'd throw two out there. One, India. I think you just can't neglect. It's #1 crypto adoption on Chainalysis Index. The one to my heart that's just is Latin America as a whole, because I think just given the economic circumstance there and the kind of instability of currencies, it's driving use cases of crypto like nowhere else in the world. I'm never going to be able to walk into the Apple store in Covent Garden and buy a Mac with Bitcoin or USDC. But if you go to Buenos Aires, it's like live examples. And I love the fact that that is kind of driving innovation. Yeah, and did DevCon in Bogota, and it was just brilliant. Like some of these stories. So yeah, lots of time.
Yeah, stablecoins are just the foundation there. That's how we even found out about DeFi, just being in Argentina and seeing people use DAI. Yeah.
Yeah, it's true. It's a shame that because the the risk profile of those countries is so high that the places where they really need crypto is also quite often the places where the fees can be the highest as well, which is a real. It's a it's not a coincidence that's happened, but unfortunately it's the opposite of what you would want to happen. Again, we'll see that change over time, I'm sure. I think also, Africa really, certainly we know that in Nigeria it's really a huge thing. People are using it for remittances. People are using it for payments. They're paying one another with it in businesses and everything. So I think North Africa is a big one at the moment. And I think maybe, depending on internet connectivity in sub-Saharan Africa, of course, that's another area where you could see real lives being improved by it as well.
I kind of agree. It's mostly in the country where the gap from the economical situation compared to what crypto can bring to the population is the bigger. But we also need to take into consideration how educated the population is to crypto. For example, as it has been mentioned, Nigeria is one of the countries where we have a lot of users. Same for LATAM, and these two areas, for example, could be a very good use case for crypto payments, since the instability from an economical perspective could be not fixed completely by crypto, but at least for people, this would bring way more value than the currency they can have, the national currency they can have currently.
Yeah, I like that you mentioned the chain analysis report. I'd be curious to see that as well, because I'd say also it's probably hard to, at the end of the day, track and really measure quantitatively the distribution, but y'all probably have the data. That was a great set of spicy takes as well in there. Does anyone have a question? We maybe have time for up to 2 questions here before we wrap it up.